buying a home, I mean, it's more than just signing papers, isn't it? It's this huge event, really reshapes your finances, your whole future.
Totally. It's massive.
But it's wild how often smart buyers, they get swept up in the nice kitchen or the yard and they just stumble into these predictable traps. Costly ones.
Well, it's that mix, right? High stakes, lots of emotion, people with checklists, sure. But when the pressure's really on,
Yeah.
I mean, like at a bidding war or staring at all that legal paperwork, that's when clarity just vanishes.
Exactly. And that's what we want to do today. Sort of shortcut that painful learning curve. We've done a deep dive looking at some really practical advice from folks who see these mistakes constantly. Specifically, we're leaning on a great post from Don and Susie Karstedt over at Rethinking Real Estate in Lake Tapps, Washington. They laid out 10 essential homebuyer mistakes and how to avoid them.
And what's so good about their insights, I think, they really cut through all the noise. They give you actionable stuff. How to handle the nerves, the back and forth of negotiation, all that info overload. It keeps your interests front and center.
Okay, so let's unpack this. Where do we start? Money, right? Got to start with the money.
Always.
Establishing that real financial picture. So, mistake number 1, and this feels like a big one, making an offer without getting properly pre-approved.
And let's be clear, pre-approved, not just pre-qualified. Big difference.
Okay, explain that.
Well, pre-qualification, that's often just a quick estimate, maybe automated. It's what you might get. Pre-approval, though, that's the lender saying, okay, we've checked your credit, your income, everything. Here's your actual limit.
Yeah.
It's a real commitment.
So what's the real danger then if you skip that pre-approval step? I mean, besides a seller maybe not taking you seriously.
You risk falling in love with something you just can't afford. Like, you start looking at $600K houses based on a flimsy prequel, then find out you're really capped at $500K. You've set yourself up for disappointment. Or worse, you make an offer, it gets accepted, and then your financing falls apart.
Ouch.
Yeah, you could lose your earnest money deposit. Sellers need certainty. Pre-approval gives them that.
Okay, certainty on the price is one thing. But what about the total cost? That brings us to mistake number 9 from the Karstedt's list. Ignoring all those extra fees beyond just the sale price, people focus on the mortgage payment and stop.
And that's a massive mistake. Closing costs. They aren't small change, and they vary. You've got fixed stuff, sure, but then title insurance, escrow fees, loan origination fees, those are often percentages.
So, not just a few $100.
Oh, no. Depending on the loan, the state,
Yeah.
it can easily be like 2 to 5% of the loan amount. We're talking potentially tens of thousands of dollars cash you need at closing.
Wow. Okay, so when do you need to get a handle on those numbers? What's the timing?
You absolutely need to go over the estimated closing cost, the loan estimate, with your agent and lender before you even make an offer.
Before.
Yeah, because once you're under contract, a lot of those fees are locked in. Your flexibility to negotiate credits or shop around for services really shrinks. It's about knowing the full picture up front.
Makes sense. And speaking of protecting yourself financially, let's hit mistake number 7. Just glancing at the insurance policy, not really reviewing it. I bet most people just get a quote and sign.
Totally. They figure, okay, insurance, check. But they're missing critical details. Like, does the policy cover actual cash value, which factors in depreciation, or replacement cost value, which pays to rebuild? Huge difference. And what about exclusions? Are you in a flood zone? Earthquake area? Standard policies often don't cover those things. You need specific riders. You have to talk to your insurance rep before closing.
Okay, so standard insurance covers the big disasters, fires, storms. But what about the smaller, annoying things that break? That leads to mistake number 8, skipping the home protection plan. How's that different?
Think of it like a service contract, usually for a year. Homeowners insurance is for disasters. A home protection plan covers failures of major systems and appliances. The furnace, AC, water heater, fridge. Stuff that breaks from normal wear and tear.
Especially right after you move in. Murphy's Law.
Exactly. It happens all the time.
Yeah.
The stress of the move, maybe things weren't used for a bit. Suddenly the dishwasher dies.
So it's like a buffer against that sudden, unexpected repair bill right after you've spent all your cash on closing.
Precisely. It's peace of mind for that first year. Often, you can negotiate for the seller to pay for it, but buyers should definitely ask about it, understand what it covers, and think about keeping it going.
Okay, good tip. We've got the finances sorted. Let's shift to actually finding the place. Now, with Zillow and everything, buyers feel super informed, but that leads to mistake number 3. Only looking at open houses and online portals. Why is that like shopping with blinders on?
Because what you see online is often just the tip of the iceberg, and sometimes it's old news, especially in a hot market. By the time a house hits Zillow, tons of agents and their buyers might have already seen it, maybe even made offers. The real gems, sometimes. They're found off-market through agent networks, maybe pocket listings.
Ah, so a good agent isn't just setting up an email alert from the MLS, they're actually plugged into that local network.
That's the key.
Yeah.
They hear about things coming soon or properties that aren't being blasted everywhere. Relying only on public sites means you're reacting, not proactively hunting. You might be missing out.
And when buyers do find a place they like online, sometimes they fall into mistake number 4. Believing they've found the perfect home. Seems weird. Shouldn't you love your house?
You should definitely love it.
Yeah.
But chasing this idea of perfect,
Yeah.
it can make you completely overlook other really great options. Or worse, get so emotional you overpay like crazy.
Right.
The goal isn't some mythical perfect house. It's finding the right house, the one that hits, say, 90% of your core needs and fits your budget and timeline. Getting fixated on one dream home can blind you to 10 other perfectly good, maybe even better possibilities. Stay flexible.
And that pragmatism needs to extend to the future, too. Mistake number 6. Not thinking about the next, say, 3 to 5 years. Why is that time frame so important?
Because selling a house is expensive. Remember those closing costs we talked about?
Ah.
Add in real estate commissions, moving costs. If you buy a place that only fits you right now, but you know your family might grow, or you might need a home office soon, or a job change could mean a different commute.
You're basically setting yourself up to move again too soon.
Exactly.
Yeah.
And moving quickly often means you haven't built enough equity to even cover the costs of selling, let alone make a profit. A smart buy works for today and the foreseeable future.
Okay, that makes sense. And guiding you through all this should be your agent. Which brings us to mistake number 5. Having an agent who's just not really engaged. Seems basic, but what should a really good agent be doing besides showing houses?
Their main job is fiduciary advocacy. That means they're legally bound to put your best interests first.
Okay.
So a truly engaged agent, they're not just unlocking doors. They're digging into comparable sales data to argue for a better price for you. They're checking on local zoning stuff that could affect value down the road. They're guarding your contractual rights like a hawk during closing.
So if it just feels like they're processing paperwork, like it's just a transaction, that's not enough.
Not even close. You need someone actively strategizing for you, fighting for you, looking out for potential problems before they happen. Your agent's engagement level directly impacts how well you navigate everything else, especially the next stage.
Right, let's pivot to that final critical phase. Due diligence, contracts, making sure you're protected. Mistake number 2 is huge, skipping the home inspection. Now, this gets tricky, right? In a bidding war, sometimes buyers waive the inspection to make their offer look better. Is that ever smart?
Oof. It is such a massive gamble. You're basically saying, I accept this house, warts and all, even the warts I can't see.
Yeah.
The inspection is your chance, really your only chance before closing, to find potentially huge, expensive problems hidden behind walls or under floors, plumbing nightmares, foundation cracks, ancient wiring. We're talking about material defects, things that seriously impact the home's value or safety.
Not just like a sticky window.
Exactly. We're talking about deal breakers or things costing tens of thousands to fix. Waiving that inspection contingency to win a bid, you might save a few $100 on the inspection fee, but you risk inheriting a money pit.
So even if you don't ask for repairs on minor stuff, just having the option to walk away if something catastrophic turns up is crucial. It's absolutely critical. The inspection gives you either peace of mind or leverage, or an escape hatch. Smart buyers, even in tough markets, try to keep at least the right to inspect, even if they limit their ability to renegotiate for small fixes. Dodging that potential bullet is priceless.
Okay, and that really ties into the last mistake, number 10, which kind of sums it all up. Just signing documents without actually reading and understanding the fine print. All those protections we've talked about, they live or die right here.
Due diligence isn't optional. It's essential. The power in your purchase agreement comes from the contingencies and, crucially, the deadlines tied to them.
Right.
Your contract gives you specific windows of time. Time to get the inspection done. Time to review HOA docs. Time to get your final loan approval. Time to back out if something isn't right without losing your deposit.
But what happens if you miss one of those deadlines? Even by a day? Poof. That protection often just evaporates. Miss your inspection deadline. You've likely lost your right to ask for repairs or walk away based on the findings, even if the inspector finds a disaster. Miss your financing deadline. Your earnest money could be at risk if the loan falls through later. Following those timelines isn't just advisable, it's absolutely necessary to keep your protections intact.
So bringing this all together, the big takeaway here, really building on what the Karstedts highlighted, is that, yeah, home buying is complicated, maybe even intimidating, but the really painful, expensive mistakes, they're almost always preventable. It comes down to prep work and paying attention to those timelines.
Absolutely. Whether it's your very first home or you've done this before, really understanding these common pitfalls puts you back in control. It puts your needs and your financial health ahead of the market frenzy or the seller's schedule. That knowledge is your strongest asset.
Okay, so that leads us to a final thought for you, the listener, to kind of mull over. We talked a lot about how critical those contract deadlines are for keeping your options open, renegotiating, or even backing out. So think about this. In the heat of the moment, with all the pressure of closing, which single contract deadline, maybe the inspection period, maybe the loan commitment date, do you think buyers miss most often? And how does missing that specific deadline potentially put their earnest money at immediate risk?
Something to consider. It definitely relates back to that crucial mistake number 10 about reading and acting on the fine print.
Use that insight, use all this knowledge to make sure your next big move is the right one. Thanks for taking this deep dive with us today.